Hi, I'm Laurent Desbois. In the previous video, we looked at the rise in the ratio of household debt relative to income that preceded the 2008 crisis. In response to this crisis, the American Central Bank injected massive amounts of liquidity to avoid bank failures, which would have caused even more personal and corporate bankruptcies and an economic depression. Since that time, for the last 5 years, interest rates are kept at record lows, an unprecedented event in modern economic history. What will happen now? Without claiming to be able to predict the future, I'll examine 3 possible scenarios. The first one is the ideal scenario. Household debt relative to income gently goes down. And economic growth, then, is fueled by factors such as innovation and productivity increases. Or, for example, by higher exports to China as they increase their consumption. Or the economy is helped by the energy revolution underway in the US, which encourages reshoring in the manufacturing sector, thanks to lower energy costs compared to other countries. The other 2 scenarios are not as rosy. Indeed, low interest rates for a long time may actually increase our vulnerability by further increasing our debt relative to our incomes. This new debt may be used to fuel bubbles in the financial markets and in real estate or elsewhere. Or possibly, this policy could lead eventually to higher inflation. If conditions in the labor markets were to tighten considerably. Finally, a third possible scenario would be a sharp drop in borrowing capacity. For example, if interest rates were to rise too quickly, causing forced liquidations, bankruptcies, economic depression, and deflation. This scenario is the most dangerous of all. The US Central Bank is hoping above all to avoid this possible scenario, as evidenced by the reluctance in September to reduce its monetary stimulus. With financial markets driving up interest rates since the beginning of the summer, the US Central Bank has so far preferred to continue its very easy monetary policy. So the question is, given that our debt levels remain so high, are we trapped? Are we condemned to generate more and more debt and asset price inflation that got us into trouble in the first place? Will we be able to raise interest rates eventually without causing economic havoc? One thing is for sure, central banks are navigating in very tricky waters.